Whew, what a brutal May for the markets. The Philippine index down 4.3% last month, largely due to the MSCI rebalancing sell-off. That concluded on a wild Friday. Let's assess the damage. My name is Dan Slim, and welcome to another episode of Monday Market Outlook. Now, early last week, a couple of GDP outlooks came out. The BSP forecasts GDP may fall below the government targets for 2024 and 2025. The target is 6 to 7% for 2024 and 6.5 to 7.5% for 2025. But BSP forecasts the GDP growth rate to be just at around 5.8 to 5.9%. However, analysts seems to have a different opinion, putting the GDP growth rate at 6% for full year 2024, just at the lower band of the 6 to 7% GDP target range. So far, analysts are projecting Q2 to be at 5.9%, which is up from the 5.7% in the first quarter. And if we compare that to a year ago, last year it was 4.3%. So we're seeing a good outlook for GDP growth in 2024. Meanwhile, we continue to see more dovish statements as Finance Secretary Ralph Recto reiterated that rates are at their peak, and we could actually see up to 150 basis point of rate cuts in the next 2 years. Now, what does this mean? 150 basis points, that's probably 6 rate cuts. No? So maybe we could have 2 rate cuts this year and then 4 rate cuts next year. No? So that's really good news for property stocks and REITs. No? Now, the dovish tone is most likely due to the general confidence that inflation may tame to 3.8% by the end of the year. This is mostly due to rice forecasts. Rice prices are projected to fall by around 20% by September, and we all know that rice forms the biggest basket of the inflation computation. Now, we will see how these projections play out as early as Wednesday, when inflation rate will be announced along with the manufacturing PMI numbers on Monday. The later part of the week, we will see more labor data, with the unemployment rate on Thursday for the Philippines and the unemployment rate for the US on payrolls Friday. Now, industrial production numbers will also be out on Friday and for most of the week. As such, just by the BSP's dovish tone alone, the peso has depreciated to 58.60 last week, and we are now close to the previous October 2022 highs of 59. I mean, who knows? It may be a case of buy the rumor and sell on the news, and the peso may actually appreciate once rates are actually cut. But in any case, there's nothing stopping the peso after it broke out of the 58 resistance level, and we may see the peso reaching 59 levels pretty soon. Maybe the government expects that there will be more spending, as our virtual assistants, video editors, graphic editors working for US online platforms may have more spending power if the peso depreciates. Meanwhile, in the stock market, the MSCI rebalancing concluded last Friday to a wild mark on close. Look at the graph here. This is the intraday graph for our select stocks, and look at the movement in the last minutes. Now, looking at the damage report from last Friday, we saw a massive outflow for AEV as expected. No? Whew, look at that. 3 billion net foreign outflows. Of course, the top 10 stocks with the most foreign inflows: ASEN, Wilcon, DMC, Globe. And the stocks with the most outflows, we have Ali, BDO, SM, Metrobank, PPI. If we look at the rebalancing info, here's what transpired. Of course, we have the AEV deletion and the addition of ASEN, among other adjustments. I usually don't show the rebalancing info that much because it may actually mislead some viewers into wrong calls. I mean, we got AEV right. ASEN had a premature rally, but it was already ongoing before this was announced, and ASIN has consolidated lately. I mean, look at SMPH. It was supposed to have a weight increase. We should have gotten inflows from SMPH, but look at where SMPH now. It's actually at a very critical zone. So it's not actually not an accurate predictor of which stocks to buy during the rebalancing. But zooming out further, let's take a quick look at the stocks with the most outflows, at least up to May 30. We have Ali, JFC, and AEV. Of course, AEV, with the massive outflow last Friday, is now the top stock with the most outflows. Now, let's zoom out further to the 1 month performance charts. Almost the same story. We have AEV, Metrobank, Ali, SM, JFC, Aboitiz Power, BPI, SMPH at the bottom of the list. Now, I suggest you make a list of the stocks you want to monitor. May take some names from the bottom of the list and take maybe a couple of names at the top of the list and identify which stocks are on their critical levels. No, because at this point, if we look at the PSEi's PE ratio, we are at its cheapest levels since the pandemic, more than 2 standard deviations below the 10-year means. I mean, the question here right now is, when will the stock market rebound and which stocks will lead the way? So let's look at the PSEi charts. The market bounced back from the critical 6,370 support zone, where we've consistently found some level of support, to close May at 6,433. Now, there's something wrong with trading view, but it closed on a green candle here. But as Friday's market was mostly boosted off of the mark on close transactions, now we will most likely open on Monday around this area here, closer to the consolidation area at 6,370. Now, let's analyze where we are. If we draw a Fibonacci retracement here from left to right, always, we are at the 0.618 fib, right? Will this hold? And is the May sell-off over after the rally last Friday? If it is, then we could see ourselves consolidating along this area up the 0.5 fib. It will be hard to reverse this sell-off just like that. We will probably see a technical rebound and a bit of a consolidation before the market decides where it wants to go. Now, if we consider the oscillators, we look at the MACD and the RSI, we see here what looks like a positive divergence, right? So this has formed a lower low, while the oscillators has formed a higher low, right? So we are seeing a positive divergence, which could be a signal for a more bullish movement pretty soon. So if we do hold this level, right, it could be a good time to buy the dip on some stocks that are already on oversold levels. So let's do a quick scan and see if we can come up with a short list of stocks that we may consider. So AC, it's not in a critical area. I would buy if it touches 580 again. SM, very close to a critical area. I would buy more at around 860 or 854. AEV, of course, massive sell-off last Friday. Is it the end of the sell-off? We could have a technical bounce, or we could go down to 3430. In any case, I would like to see a better structure to confirm that this downtrend, look at this downtrend, right, goes all the way here. I would like more indication that this downtrend has reversed. Well, fundamentally, AEV looks like it is going to be a better year in 2024. So we'll see. Now, we have Ali, of course, on a critical zone. It could be a good level to buy. Make sure to set a stop loss here at around 25.35. SMPH also in a good buy zone. AREIT, buy at 33, or better yet at 32. Among the banks, MBT looks more promising. I like this zone here, 62, 61.70. Buy more if it reaches 59.70. Wait for a consolidation, as this was a big sell-off here. No, Apex, right? We mentioned buy the dip. last week. Congratulations if you were able to do so. Plus, look at that, a breakout of the 14 peso resistance here and a retrace. If it defends 14 peso, a good buy the dip opportunity, as the target price is now upgraded to 17 pesos. JFC back at 216, a great zone to buy actually, but I would probably wait for it to go down to 210 or 204. And lastly, AP 30, holding at 34. See if it will continue to hold this level, and it would be a good chance to buy more. We have quite a number of stocks at very interesting levels, but be conservative entering into some stocks that are at their critical levels. Monitor the 6,370 level if it will hold for this week. So as we await inflation and employment data this week, barring any surprises, we may have a technical rebound and a consolidation around the 6,400, 6,500 area. On to the global markets, the Dow had one of its worst day last week as the failed bond offering triggered a spike in treasury yields. This was followed by an adjustment in the GDP numbers from 1.6% last quarter to just 1.3% due to softer consumer spending. But on Friday, the core PSEi numbers came in at 2.8%, which is in line with expectations. But on a month-on-month basis, there was a slight improvement, coming in at 0.2%, which is cooler than the 0.3% expectations. So if we look at the S&P 500 charts as expected, let's zoom in here. As expected, the S&P 500 pulled back after it formed a change of trend reversal here, dipping into the 5,222 and even briefly touching the 5,185 major bull demand zone. Zooming into the 2-hour charts, right? We mentioned last week that there was a high probability that the S&P 500 may go down to either 225 or 5,186 because of the break of structure and the trend reversal here, and it did so, right? So the point of entry for short sellers would be here at the 61.8 fib, and this is actually a great zone for day traders and scalpers to short the markets. So congratulations if you were able to do so. It was also a wild Friday for the S&P 500 as the market swung back and rallied to close the session up 1.8% to close at 5,292. So the S&P 500 achieved its best May since May of 2021, and it is the 6th consecutive positive month for the S&P 500 out of the last 7 months. For this week, it looks like the S&P 500 could continue to rally all the way back to this demand zone here. This is going to be an interesting level for us to monitor if the S&P 500 reaches this zone here, but not before it might retrace back to around 5,250 before continuing its rally to this zone. So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates, and a quick shout out to the consistent viewers and consistent commenters on the channel. Thank you for dropping by. Good luck to us in June, hoping for a better market this month. So guys, good luck on your trades. Please manage your risk accordingly, and I'll see you again next week. Bye-bye.